If someone were to ask you what is more dangerous, electoral bonds or black money, what would you say? Most likely you will say black money because black money is associated with tax evasion and criminal activities. But what about electoral bonds? In this video, we argue that these bonds pose a greater threat in politics than black money. Many of us don't associate such bonds with threats because we are unaware of how they function. Before we delve deeper into this matter, we must first understand the two types of funding that flows from companies to political parties. The first type is what we can call genuine donations. This is money that the company pays out as part of its corporate social responsibility mandate to parties. The aim of this funding is to be part of the overall democratic process in the country. This is usually done in full public view so that voters can also know who's funding which party. The second type of payment sent by companies to parties comprise kickbacks and bribes. This is usually not paid under the public gaze because this basically is a thank you payment from the company in exchange for receiving illegal favors. Such favors may include the suspension of an ongoing investigation, the award of a large construction contract, or the dilution of regulatory provisions that were preventing the company from making more profits. First, let us look at the role of electoral bonds in the first type, legitimate donations. This is true donation, done with an altruistic motive. It supports political parties that usually have very few legitimate sources of income. For this reason, there should ideally be no secrecy associated with this type of donation. However, the supporters of electoral bond scheme believe that even here there should be an option for companies to keep their donations secret. They argue that if donations are done in the open, as it is now after the Supreme Court judgment, this can expose the company to vindictive actions by disgruntled political parties, especially those in power. They argue that since everyone can see the entire donation data, parties will soon start comparing what they got with what somebody else got. In the end, one or the other party may feel aggrieved that it got less than the others. This, they point out, can lead to vindictive measures, particularly if the aggrieved party is in power. That party can then use official machinery, such as Enforcement Directorate or the Tax Department, to harass the company in 100 different ways. An example of this was when donors of the Aam Aadmi Party in its initial years started getting income tax notices soon after their names were put on the website. On the other hand, if the donation is always done in private, they say this would not be there. So they argue that electoral bonds, which facilitate such anonymous donations, are really good, especially for smaller parties and those in the opposition. This was also the official justification given by the government in the Supreme Court of India in its case defending electoral bonds. But is this reason valid? Not really, because electoral bonds do not provide much cover from the party that has the greatest capacity to harass donors, the party in power. Whatever the theory says, in actual practice, the ruling party can find out who has donated how much money and to which party without much trouble. This can be done from two sources. The first source is the bank which handles these transactions, SBI in our case. The second source is the investigating agencies like ED, CBI and Income Tax Department. First, let us take the case of SBI. It is true that SBI does not enter all the information, especially those related to the identity of the donor, into its core banking system. The core banking system is the computer network used by all employees to enter and retrieve data, and entering the name of the company in this system would have led to it getting leaked sooner or later. But the problem is that SBI has to enter it somewhere, so it keeps it in a separate database which is accessible only to the top management. However, if something is available to the top management, there is also a fair chance that it may get leaked to the government. After all, top SBI officials have to work very closely with the governments of the day. The second source of potential leaks is investigating agencies. This is because Section 7(4) of the Electoral Bond Scheme says that SBI will have to share all its transaction data, including the identity of the sender and the amount, to any law enforcement agency. The only condition imposed is that the agency must be asking for this data as part of an investigation into a registered criminal case. Hence, we can see that the primary justification for this scheme, protecting smaller parties and their donors from big brother government, does not really work. Not only does it not work, electoral bonds actually make the situation much worse for the opposition parties. This is because the scheme introduces what is called an information asymmetry between the ruling party and others. While the ruling party gets to know who's donating to the opposition, there is no way for the opposition or the public to get to know who's donating to the ruling party. This is unlike the earlier system where everyone's data was out in the open and everyone knew who was giving to who. The problem with this information asymmetry is that it enables the ruling party to choke off funds to the opposition party by intimidating their donors. While the ruling party goes about unleashing raids and investigations into companies that fund the opposition, its own donors enjoy full anonymity due to the bonds and are protected from any kind of public scrutiny or questions. Hence, the stated reason behind the electoral bonds, protecting the donors from political persecution, does not really hold. So that was about genuine donations. Now let us come to the second type of donations, bribes and kickbacks. Here the need for electoral bonds is tied to the difficulty in managing black money. Now you may wonder what black money has to do with political funding. Black money refers to funds that are not shown in official records. Before electoral bonds came about, most of the assets of political parties were held in black money. Why? To understand that, we must also understand why black money or undeclared funds actually exist in this economy. It is believed that 35 to 50% of India's economic transactions happen in the black. There are two reasons why black money exists. One has to do with the unrealistically high levels of taxation imposed on small businesses in India. If businesses were to show all their revenue on the record and pay tax on all of it, there will be very little to do actual business with. Hence, from the very beginning, businessmen kept two accounts, one for the authorities and one for themselves to know how their business is actually doing. This is the more benign aspect of black money. There is also a more dangerous side to it. Because it exists outside the probing eyes of law enforcement, black money is also used in all kinds of nefarious and criminal activities, such as drugs trade, terrorism, and last but not the least, bribing government officials and parties. Companies pay bribes to political parties for all kinds of reasons. To get a contract to construct a highway or a tunnel, to make an investigation go away, or to get a law or rule changed so that the company can do better business. In this context, it should be noted that the data released by SBI recently has shown that nearly all the companies who have made large transfers to political parties over the last 4 years are those that depend heavily on government to get work contracts, such as construction companies, mining companies, timber companies, and so on. Below them, in terms of donations, are companies that are in heavily regulated industries, such as those engaged in large-scale manufacturing, lottery and gambling, and pharmaceuticals. By all indications, political parties seem to be getting most of the income by way of kickbacks and bribes, either in return for favors already granted or simply as a way of keeping them happy. But before the electoral bonds era, this was a very tedious affair. Before bonds were introduced, companies could not simply disguise the bribes and kickbacks as donations as they can do under electoral bonds. Since it was all done in the open, anyone could put two and two together. Take, for example, a company that got a 14,000 crore project and wanted to kick back rupees 400 crore to the ruling party. If we tried to send this amount publicly as a donation through traditional channels, media and activists would soon pick up on it and make out what's going on. Hence, they had to rely on non-official channels, black money to be specific. But transactions in black money come with their own complications. First, the companies need to maintain a dedicated pool of black money just to bribe politicians and parties to get approvals and contracts. But the bigger problems was faced by the parties themselves who received these funds. Since the donation is made in the black, the money could not be shown on official accounts. It had to be kept in cash where it was prone to pilferage and seizure by investigating agencies such as ED. A case in point is the recent seizure of rupees 350 crore in cash from a businessman linked to an opposition Rajya Sabha MP from Odisha. The only effective way for a party to solve this problem was to encourage companies to route all their payments, including bribes and kickbacks, through official or white channels. But then this would make them open to scrutiny by the media and others. But what if there was a way to make this payment through official banking channels but still avoid any scrutiny? This is one of the things that the 2017 scheme of electoral bonds delivered. The scheme allowed companies to send money from the official bank account to the party's official bank account in complete secrecy, avoiding any public scrutiny. In fact, this aspect of the scheme was highlighted by the government lawyer, Solicitor General Tushar Mehta, in the Supreme Court hearings.
Our case was that we want to curb the black money. A criminal may have paid the donation, but ultimately the donation comes in the white economy, and we could not persuade your lordships. Lord, your lordships passed a judgment.
On the face of it, this looks like a great scheme. It allows the companies to avoid the use of black money, and it allows political parties to show the money in their official accounts. Indeed, this led to a sharp increase in the declared assets of political parties and presumably a decline in the use of black money in politics. For example, the declared assets of India's largest political party zoomed from a mere rupees 893 crore in 2015-16, a year before the bonds were introduced, to rupees 6,047 crore in 2021-2022. So it's a great scheme, right? It helps get rid of black money. What more could you ask for? Sure, but for one small problem. It was reducing the use of black money by enabling the use of white money in activities such as bribery and kickbacks. This is like reducing the use of black money by allowing drug traffickers to use official banking channels in a completely anonymous manner. The problem here is that in trying to solve one problem, we were creating a much more serious one. By opening up the use of official banking channels for questionable activities such as sending bribes and kickbacks, the scheme made such illegal activities very easy and simple to carry out. Little wonder that people like Prashant Kishore called it the legalization of corruption. With transferring bribes becoming as easy as the click of a button and practically risk-free, more and more companies must have started doing this. This would have disastrous results. If contracts for constructing roads, tunnels, bridges, and other infrastructure start going to companies that make these so-called donations to parties, then this will obviously end up with the most unscrupulous and corrupt companies, not the most qualified. The bridges, roads, and railways built by these companies would become a public danger rather than a public amenity. In short, while the bond scheme did reduce the use of black money, it did so at a very, very high cost. In doing so, it also likely punished honest companies who refused to make such donations/bribes while rewarding unscrupulous ones that were willing to compromise on quality and share a part of the savings with political parties. The question at the end of all this is, what is really better, black money or electoral bonds?